So couple of insights I pulled from that video. So, and this is the one I've been kind of yelling from the rooftops for a long time. This I'm pretty sure it came from you. So investors have absorbed losses and are in effect subsidizing affordable rentals. So this is basically an argument you're making that investors who bought pre-cons are now cash flow negative, providing below market rent units unintentionally. And for the longest time, I feel like not that this is to excuse anything that John is saying, but investors have truly, through rent control and the way the landlord-tenant board is, which is, I think, intentionally made to be, you know, in perpetual delay.
Yeah.
Ultimately, we're providing Toronto subsidized housing. Ultimately, that's what we're doing
Yeah, I think so.
by a broken LTV.
And I'm not saying that to give investors a pat on the back. I'm just saying it because like people are saying that there's this huge surplus value that investors are capturing, but by a large margin, that's actually not true. And especially the investors that we're demonizing, which are the ones who have purchased in the last 5 years, if anything, they're actually trading at a negative surplus value. So they're actually their monthly burn rate on that unit is actually higher than the rent that they're collecting, which means that they're absorbing a sunk cost to get that principal pay down. So maybe the mortgage is paying down $600 a month, and they're actually burning $500 a month in interest, and so they're only getting $100 in like surplus value of principal pay down, and they're taking a huge cost risk to do that. So they're basically getting support in their savings vehicle of an investment, but they're also risking, whatever $200,000 down payment to do that. And so yeah, and that would be a good example.